G'day, Binanceans. Welcome back to our first episode of Binance Beach for the year. We are your weekly Aussie crypto news show that covers local updates, important developments in the world of Bitcoin, crypto, and Binance. And today, I'm going to be taking some time to reflect on 2025 and the year that was, and then looking ahead at some 2026 predictions. Over the course of January as well, I'm going to try and get a few more of our local talking heads onto the show to talk about what they saw last year and what they see coming in 2026. Markets-wise, crypto-wise, product-wise, tech-wise, and Binance Australia-wise, we're going to be covering a bunch of different, areas and looking at what this year might bring us. But for today, I'm going to be sharing a few of my personal thoughts and what I think could be coming down the pipeline in 2026. So, without further ado, let's kick into it. I think the first and most important call out for me as I start with 2025 reflections is I think 2025 was the year where we truly kind of realized as a market, as a global market, that US treasuries are dead as a reserve asset. Gold is on the way up, treasuries are on the way down. And this is a very clear trend reversal. You know, this chart was one that went a little bit viral last year in 2025, showing that gold is now a larger share of reserves than US treasuries. And we're continuing to see the US dollar as well decline. I pulled this tweet from a Bloomberg chart that kind of misrepresented this. You might have seen this floating around on Twitter for the last week. US dollar is still the majority share, but gold is very clearly on the way up. And what was fascinating, obviously, there were some pretty significant geopolitical kind of movements, and there's a long tail of events that has led towards this, which I'm not going to get into in this show specifically today. But I do feel like 2025 was the year where this really kind of hit not only central banks, but retail as well. We saw so much retail FOMO for gold. There was this real demand for a sovereign reserve asset that couldn't be debased, that could not be printed, that could not be confiscated if you weren't necessarily an ally of the US. And that demand really drove that huge increase in the price of gold over the course of 2025. Now, obviously, as a Bitcoiner, as a crypto enthusiast, you might look at that and say, well, why didn't we see more nation states, more sovereigns moving into Bitcoin? Bitcoin is another sovereign reserve asset. It can't be debased. It's decentralized like gold. It shares many of gold's attractive qualities. But why did that not happen? Well, it did a little bit, right? Like we definitely saw some movement in the sovereign nation state Bitcoin reserve space. The US established its Bitcoin reserve in January, kind of, but it didn't go ahead and purchase any more Bitcoin. El Salvador obviously has been doing this for quite some time and continued to stack. And there are a number of other countries that, kind of talked about dipping toe in the water. Pakistan is particularly one that springs to mind. But I think we're still so very, 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 very early on this play. We're still very, very early on nation state adoption. And I think we definitely got a little bit overexcited, a little bit over frothy on that at the start of 2025. And we thought maybe it's here, maybe it's coming all at once. But I think that is a trend we're going to keep seeing, but it's not something that is going to change overnight necessarily in the same way that there was that really significant pivot back to central bank and retail buying of gold as a sovereign reserve asset. So that meant that 2025 was actually a pretty heavy bear market for Bitcoin in gold terms, down 44%, let's call that, in gold terms over the course of the year. So this is kind of what matters now, I think, too. It's almost not worth looking at Bitcoin in dollar terms. Like, we know that the dollar is going to continue to be debased. We know that Bitcoin is a scarce asset. It's far more valuable to measure Bitcoin against gold, I think, and decide whether we're in a bear market or a bull market based on Bitcoin's performance against gold. Not only that, it's going to really help us measure that trend over time of the rise of Bitcoin as a sovereign reserve asset for individuals, for corporations, and for nation states. And its success probably should be measured against gold, not against the dollar, which we know will be debased. So yeah, brutal bear market in 2025. Obviously, Bitcoin kind of started and finished around a similar point in dollar terms. CoinMarketCap in the last year has us down 5%. This is the last year, not the 2025 calendar year. So you might find a slightly different metric here or there. But we definitely, could probably call 2025 a bit of a disappointment, given how bullish the run-up in 2024 was through November, December, into the Trump inauguration, the launch of the Trump meme coin, and massive market frothiness in January. And while we did see some pretty strong performance from Bitcoin through kind of the middle and quarter three parts of the year where, we got up to that 124, 125 kind of mark, we definitely didn't see that sustain through November, through December. We basically finished where we started in dollar terms and well down in gold terms. So, I think from a macro perspective, from a macro asset perspective, that's probably the story of 2025 for Bitcoin and for crypto. The other thing which obviously we have to talk about, because this was a pretty major part of 2025, was the spot Bitcoin ETFs. And of course, there were a number of other ETF approvals. Some other assets got approved. There's ETFs, the Sol ETFs. There's a number of other assets that are starting to play in this space now. But Bitcoin is the biggest because number one. So I think I'll just talk about this one from an ETF perspective rather than going into some really detailed analysis on this. We saw a lot of recommendations from major financial institutions, major players saying, you need to be thinking about that 1 to 5% allocation to Bitcoin. And we definitely saw that trend start to, kind of take shape and build some momentum in 2025, which I think potentially is what kept our, bear market pricing a little bit higher through November and December, where we definitely were pretty high on the fear and greed index. We were definitely feeling pretty shaky. And there was a lot of questions around, are we back into a big bear market in fiat terms, in dollar terms even? Are we going to see a 70 or an 80% drawdown? But I think the ETFs really helped to kind of bolster that price and create some persistent buy pressure over time, even though, they did have outflows again in November and December, which you can kind of see through the later part of the year. They definitely helped to bolster demand. And so, I think potentially have helped mute the downside a little bit and create a bit more of a floor on Bitcoin around that 80K mark, which we've seen Bitcoin come down to a number of times this year. What is fascinating is I think the ETFs launched at around like 40 to 44. Off the top of my head, it might have been about 44K Bitcoin price when the ETFs launched. What would be a fascinating and crazy phenomenon would be to see if the ETFs actually if Bitcoin dropped below that price, how the ETFs would respond. But that's a fair way down from where we are right now. So personally kind of hoping that I don't see that happen. Another really important trend to call out this year, which I think really developed after January, because January was the height of the market in 2025. Prediction markets and crypto prediction markets were a huge theme of 2025, but I think there's a particular kind of call out here. Retail was still pretty squeezed, I think, in 2025. We haven't seen that huge liquidity event like we saw in COVID, like markets saw in 2008. We haven't seen that big, just like amount of liquidity flow to retail in the same way that we have in the past that have driven huge crypto bull runs. And one of the stories of 2025 outside of, those kind of January meme coin markets was the lack of an alt season, the lack of a DeFi summer, an altcoin summer, a really strong alt season that, moved beyond Bitcoin. And I think there's 2 points to be made there. And the first one is that a point that I've made a few times on the show is I think retail was still pretty squeezed. Cost of living was high. People were, low on cash savings. You don't have to go too far to find metrics on, people after paying burritos and Coachella tickets. And so I think broadly speaking, retail did not have a lot of money to spend in altcoin markets. And the second factor here, which I think is the big call out and the big change in 2025, is that there has been such a rise of other places to go and look for high risk, high return, markets. In 2025, we had this huge surge in Bitcoin treasury companies. We had obviously those massive surges in precious metals, and silver finished the year with a crazy green candle. And then we had the rise of prediction markets, Polymarket, Kalshi. There were a lot of other places where you could go and seek high risk, high return. And even equities, even the stock market was behaving through those tariff periods with enormous volatility. So you didn't have to go to altcoin markets to look for 10, 20, 50 X's. These highly volatile, high risk, high return markets are more accessible. There were more of these markets in 2025 than there probably ever have been. And I think that meant in particular that altcoins were not necessarily the only place that people were going to look for those kind of markets. And yeah, I think the final kind of takeaway for me here is that Bitcoin is boring right now. Like, it had a pretty boring 2025, and gold took the sovereign reserve asset narrative and really dominated there. And I think there also is, now that the ETFs have launched, a bit of a take in the mind of the mainstream investor that Bitcoin is a bit mid-risk, mid-return. It's not that high risk, high return payoff that it once had. And so, as we close the year pretty flat in fiat terms and well down on gold terms, from where we started, I think those are probably some of my key reflections around what happened, what drove, a pretty flat or bearish year in Bitcoin. And let's move on to 2026. So what is in store for 2026? What do I see coming down the pipeline? I'll start with a bit of a macro take, I guess. And yeah, take this with a grain of salt. I'm not a macroeconomist. I'm just a punter. But I think the trends that we're starting to see in markets are really clear. First up, we now live in a multipolar world. To my first point on the 2025 reflections, without a global reserve currency, so much as a global reserve asset, right? Like, gold is really taking back, the majority of central bank reserve assets, of individual sovereign reserve assets. Gold has that enormous narrative and that enormous surge behind it. And I think that is definitely going to continue to be a macro trend. And that's going to be a key part of a markets trend too in 2026. The old rules are dead. Survival is number one. The US has very heavily focused on that this year. Without America first, the Eurozone has talked a lot about self-sufficiency. We have the rise of Russia, the rise of China. This is a multipolar world that we now live in, and there's currency and market implications for that, which we've seen in 2025, and I think we'll keep seeing in 2026. The US is functionally bankrupt. The West, by extension, is functionally bankrupt, and they need to print to meet their debt obligations, or they need to go and find, these scarce resources, the means of production, production capacity, commodities and businesses and, trade, wherever it can find them, get them or take them. I think that's going to continue to be a really strong macro trend in 2026 and will accelerate. And so, of course, fiat debasement must accelerate in all markets in order to keep up with this, but especially in the US. All countries will devalue their currencies as we continue to see, rising geopolitical turmoil and changes in this world order. And finally, on a macro perspective, I think politicians won't fail to use the money printer to buy votes. It's definitely a trend we'll see again in 2026. But for Bitcoin and crypto markets, what do these key kind of trends mean, I think the 4-year cycle is now dead. Bitcoin is driven by macro. And I also think, to my point in the first half of the show, Bitcoin should be measured against gold. We should be measuring Bitcoin in gold terms as a peer gold competitor, as a sovereign reserve asset. I think that the comparison is really no longer pertinent. It's almost not worth doing, right? Apart from just to keep an eye on, where we've come from, where we're going. We're all pretty used to looking at Bitcoin in US dollar or Aussie dollar terms, but I think really looking at Bitcoin's performance in gold is where the rubber hits the road in 2026. And I hope to see a better year. I believe Bitcoin is a better sovereign reserve asset. I believe it's a better money than gold. But so far, the market is not necessarily there yet. And we are going to be behind on that, right? Like gold has a 5,000-year history. Bitcoin is incredibly young, is incredibly new, has some incredibly optimistic, kind of moves behind it. ETF flows last year, the sovereign reserve interest, but we're still so early in that space. And, we're still relying primarily on individuals and now to a lesser extent, corporations to fuel that inflow. And so let's see how that plays out in 2026, competing with the central bank buying, the huge, demand that central banks pose, and the fact that central banks can print money to buy gold. They can do that so easily and without any local political ramifications, right? Particularly, across the East or across markets outside of the US, that's going to be very hard to compete with from a flow perspective. So Bitcoin has a lot of work to do to try and match that level of flow into gold. And as a result, turn around the kind of gold denominated bear market that we're in. Sovereign Bitcoin interest, I think, will continue to grow. Corporate Bitcoin interest will continue to grow. But like I said, it's about whether it can keep pace with the gold demand that I think we're going to keep seeing in 2026 and 2027. Because we have debasing fiat currencies, retail continues to get brutally squeezed by inflation and trueflation. And so I think this will be a key theme of 2026 as well, particularly in Australia. We may see rate hikes instead of rate cuts that I think a lot of people were kind of hoping for. So yeah, this may not be a great year again for retail. You need to own assets. You need to be holding assets to escape fiat debasement. And, I think a lot of people might not be quite there yet. So I'm going to do my best job to keep spreading the good word about Bitcoin and teaching people how money works so that more people can get on this train. Tokenization, I think, is going to be a key trend. That narrative and stable coins will float layer ones, both from an adoption and a price perspective in 2026, I think. I don't know if they'll outperform BTC. I think the sovereign reserve asset narrative that Bitcoin has is its best chance of competing with and keeping up with gold demand. And I can't necessarily see tokenization and stablecoins being as strong a capital attractor. We'll see about that. They might be, right? Like there is huge stablecoin demand around the world, and in a lot of places we've seen stablecoins as the demand for, assets outside of a local fiat currency as a more attractive prospect than Bitcoin because they are stable in fiat terms. But they are volatile to the downside against Bitcoin, against gold, generally speaking. And so we'll see whether Bitcoin can, start to kind of claw back some of that market share or dominate that market, or whether stable coins will be, what people in other markets other than the US move to in escaping local debasement. Yeah, we'll see. I think Bitcoin might be able to dominate that. And I think particularly with the recent surges into gold and silver and commodities, we'll see that some of that rotate into Bitcoin as well. And Bitcoin, I think in 2026 will really fall back, will really lean back on that digital gold narrative. That is the most logical play, I think, for selling Bitcoin as a reserve asset. The digital gold idea is probably the smartest play for it to piggyback off the back of, huge central bank buying of gold, huge retail FOMO of gold. I think that might be Bitcoin's best strategy, leaning back on digital gold to regain momentum. And so it will be a battle for digital gold against, digital US dollars abroad. What is more attractive to, people to retail around the world? I think that's an interesting one to watch. My pick is that Bitcoin will outperform, but let's see if stablecoins and as a result, layer ones are more, outperform Bitcoin in 2026. I think we'll continue to see volatility. All markets will be volatile as we learn the rules, as we learn, a new world order, which shifts the focus away from Bitcoin as the alpha asset for volatility. You don't need to go looking for volatility and find Bitcoin. I think there'll be plenty of places people can find volatility, trade volatility. And so I think, Bitcoin and altcoins, the altcoin markets may not necessarily be the benefactor of flows looking for volatility that they have in the past. I think we see an extension of that trend, which I mentioned before. The way that financial markets work now, it is driven by Twitter, it's driven by real-time information, and things move in real time. It's driven by prediction markets too. Watching their impact on financial markets in 2025 has been wild. I think we see a lot more of that in 2026, and it even could be exacerbated as we continue to see, the world change and geopolitical tensions rise and things move quite quickly. Quantum FUD as well. I picked that in 2026 as a barrier to Bitcoin flows. I think we need to see more education and a more lay understanding of this. This is an area that I'd like to keep doing more reading and research. And so, I think that could be definitely a barrier to flows into Bitcoin, when there's an asset that a lot of people don't understand. And then there's this quantum computing idea that even less people understand. And there's this idea that potentially quantum could be a major disruptor for Bitcoin. That is a big question mark on the industry from people who aren't, following that day to day, or who don't have a really in-depth understanding of either the asset or of quantum. And I can say I have a great understanding of Bitcoin, I have a pretty good understanding of Bitcoin, but I don't have a great understanding of quantum. And so this is an area that as a community, I think we really need to address and make easier to understand. There's a few existential questions that the hypothetical development of quantum computing might pose for Bitcoin as well. So, I think those need to be addressed in 2026, and maybe we should do a show on that. Maybe we should do a show on quantum. Precious metals will continue to be a big focus in 2026. I think I spoke about that enough already. And so, yeah, I guess those are my 2026 predictions. Let's see what comes true. Please bookmark the show and take note, and let's revisit this at the end of the year and look at all the things I've got wrong. But there's one closing thought that I want to leave you guys with, because I think this is a really important thing to understand. I saw this tweet yesterday or the day before, and it really kind of blew my mind, to be honest. I haven't really thought about Bitcoin in these terms recently, because I think there are these widely recognized kind of macro trends that are at play right now. You point to a multipolar world. You point to the trend towards gold as the sovereign reserve asset over a global reserve currency. And we know what Bitcoin is doing. We know the crypto stories. We know the areas of trend. We can get caught in the weeds a little bit. And, around the cycle, around the narrative of the 4-year cycle, diminishing returns, it's a bigger asset, it can't move. But silver just proved that wrong. Silver is, over the past couple of months, silver moved from a $2 trillion asset to a $4 trillion asset. And that was narrative and scarcity driven. That does destroy, as Julian points out, it does destroy the entire thesis of diminishing returns, less volatility in a big stable asset. The more flows we get, the less volatile we'll be. Maybe not. Maybe, if the narrative comes right, everything can change overnight. If all of a sudden, the world wakes up tomorrow and goes, yep, Bitcoin, digital gold, it needs to be a part of this commodity mix. We could very well see similar inflows. We could very well see a similar change or similar shift in perspective. And we could very well see Bitcoin go from $2 trillion to a $4 trillion asset in 2 months and just completely wipe out everything that we've thought about Bitcoin for the last kind of 16 to 17 years. There's plenty of bullish people in Bitcoin, plenty of bullish people in crypto who think that that's a possibility. And this was a cool tweet that kind of made me revisit that as well. That's it for me this week, Binanceans. I hope you enjoyed that. Please ask questions in the comments. Tell me what you think. Give me your opinion. Please like and subscribe to the show and let me know what you'd like to see in 2026. I'll do my best to make it happen. Have a fantastic weekend, guys. I will see you next week. Bye. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. DYOR, Binanceans.